Hey everybody, my name's Bobby Matson. I'm the founder and CEO at Payitoff. We're embeddable debt management for financial applications. We work with consumer banks, lenders, as well as financial wellness applications to help their customers link their debt accounts, get guidance on their best next step, as well as produce money-saving actions in-app. Now, we work within all consumer debt, but today, what I want to show you is how we're working with banks to help them prepare for student loan payment resumption, which is happening October 1st. So, on October 1st, roughly $18 billion will be applied to student loan accounts. By Finovate next year, can anyone tell me what that number will turn into and grow into? It's roughly $216 billion that will be applied to accounts from bank accounts. So it actually creates a very big risk of deposit loss in this unbelievable seismic financial services event. It's never happened before that an entire debt category is suddenly online again. So there's good news here, most of these loans I'm describing are federal loans, which means they have dozens of loan assistance programs and federal repayment options that allow borrowers to reduce this payment and make it more manageable. The issue is that they're very complex and difficult to navigate. I know this because my wife and I had six-figure student loans 6-7 years ago, as well as a bunch of credit card debt. It was very difficult for us to manage, and we couldn't even think about a six-figure mortgage or our life goals, having kids, when we had this kind of issue and didn't know a path forward. My background's in engineering, working on Fandango, so if you search for a theater on Fandango, I tech led the team that worked on that. And I wanted to apply this same sort of pathfinding algorithm to this issue that we were having. And so I built an engine for us that helped us navigate our way through it, saved us thousands of dollars, as well as meant we could afford a mortgage. And now we have a house and 2 kids. So 6 years later, we're literally the walking testimonial, and we've since scaled this to millions. So today what I'll be introducing you to is Pay It Off Now, where in an afternoon, banks can offer to their customers a way to get set up for repayment, drive net new deposit accounts, as well as retain deposits already on their books. So here's how it works. All right. So, as a borrower, I've gotten an email from my bank, or maybe a piece of content describing the payment resumption, or maybe just an in-app notification. They land on this page where it's co-branded. We're showing an example, Jedi Bank, of prompting the user to explore what kind of options are available to them. Now, this is a no-code solution, very easy to implement, just a link that's white-labeled. And it uses a lot of our embeddable solutions, and it's built entirely on our API, where we're able, in the first step here, to help a borrower find their servicer, since most borrowers don't even know who their servicer is after being on a payment pause for 3.5 years, as well as be able to link with their credentials if they do. So I'll show you how with just a phone number, this will actually text me, date of birth and zip code, and grabbing the proper consents needed for the carrier network and the bureau we work with and partner with on this. I'm getting a code to my phone right now, where what we're really doing is verifying the borrower with the device, and then we're pulling the trades so that we can identify their servicer and then log in to the account. Now, the CFPB estimated that 60% of all borrowers will have changed servicers since the beginning of the payment resumption, which is why this is such an issue. When we implemented this, 1 in 5 borrowers were able to locate their servicer right away. So it meant a big lift in funnel conversion for this linking flow. Now that I found my servicers, I can come in here, enter my credentials. We partner with the Student Loan Servicing Alliance. The executive director, Scott Buchanan, is on our cap table. And what that allows us to do is have very deep relationships with the servicers directly, so that we're able to basically have read-write access to these accounts. It means once these accounts are linked, the borrower can leave this flow, and for the bank, they're able to have access to the data that's been linked in that process, and see if, in case there's other financial products even that would be useful to that customer. They can come back in and then see their contact info so they can persist the account, re-log in. And then what happens as part of this flow is that step 2 is always finding some opening or availability for the borrower to save money. We'll ask for the necessary inputs. In this case, it's income, as well as filing status, and a little bit of information about their family size. So I see my payments $200 as a borrower, and then I see all these other options available to me. I can save roughly $200 a month. Now I want to stress, that's $200 a month that isn't leaving the bank account. That's something that's been retained in this process. The borrower is saving this money because they're entering, in this case, an income-driven plan. The government pays for a lot of these interest subsidies, interest charges on this account, so they're actually saving over the long run of this term. It's not like a normal loan structure. It's a loan, essentially a loan modification program. The last step is producing an action in-app, so actually enrolling them in-app. They don't have to go anywhere else to do this. We're asking specific questions and inputs that Department of Education requires as part of this process. And then the borrower is enrolled in the program and can start saving. In 10 business days, they'll see our payment update. Again, this isn't a dispersed loan. This isn't like a new refi or anything. It's an existing plan that they were able to enroll in through this process. And a lot of partners, a good example, use this as a way to generate net new accounts, and as well as help them with the deposit issue I was mentioning, and reduce charge-off risk if you've lent to student loan borrowers in the past 3.5 years. This is something you can easily put as a link within your content that will link out to the experience so that you can solve this issue for your customers very quickly. Yeah, please come to our booth to better understand this problem. We have a bank deposit impact estimator, so if you want to see what the impact could be on your bank, please come check us out downstairs. Thank you.